Hello everyone, welcome back to my YouTube channel. Today is August the 14th. This is the part 2 of the video series of growth stock versus dividend stock. In the part 1 video, I talked about if you invested $10,000 in each of the following companies, namely Netflix, Amazon, and Tesla. From its IPO until today's market price, how much your value gonna be looked at. In today's video, I'm gonna talk about if you invested the same $10,000 into Apple stock since its IPO back in 1980, 40 years later, how much your portfolio value gonna be. Apple also gonna have a 4-for-1 stock split at the end of this month. In this video, I'm gonna talk about should you or should you not invest in the stock on its split. I will give you my thoughts on it. The split will not change the value of the company, nor will it change its fundamentals of the company. It, however, will become more appealing to certain types of investors per share price point. Thus, it may invite the price appreciation. We already see in the recent 2 days, Apple price already appreciated quite a bit. Apple stock has rewarded its shareholders very handsomely all through those years, made many people rich, and some of them become millionaires. Apple stock rewarded its shareholders not only through its capital appreciation, also through dividend income. Apple stock is one of those stocks that has pristine balance sheets backed by its secular growth and stellar cash flow. Apple stock is one of those stocks that you can buy and hold forever. The question is, should you invest in this Apple stock, especially during this split period?
Excuse me, pardon me, my lover, my doll. I like the way the fragrance brings out her perfume. As for my coffee, no need for sugar. The word is sweet enough when she is in the room.
Apple IPO'd back in December 1980. At that time, the IPO price is also close somewhere to $20 per share. So let's say you spend $10,000, bought $20 per share, 500 shares total as other stocks that I talk about. All right. Since then, Apple had 4 times split in the history. 2-to-1 split in 1987, 2-to-1 split in 2000, 2-to-1 split in 2005, another 7-to-1 split back in June 2014. And then it is expected to have 5th split, which is a 4-to-1 split on August the 31st, 2020. So let's say you bought initially 500 shares. After the 4 previous split, you are looking at 56-to-1, which is 28,000 shares. At current price, closing price on Friday, Apple was traded at $444. You are looking at $12.432 million within that 40 years period. You made that much. That means you threw in $10,000 at the beginning 1980 without doing anything. You totally forget about it. All right, you did not sell, did not buy, did not do trade. You just sit on it. $12.4 million. That is translating to $310,800 per single year. That is 33,018% in the past year's growth rate. Also equals to 825% growth rate each single year. That is even much more than Tesla's growth rate. Starting 2012, Apple started to pay quarterly dividends. Currently, Apple is paying $3.28 per year, which is about 82 cents per share. With 28,000 shares you purchased without moving anything, at the current dividend rate, you are making about $22,960 per quarter. That is add on to your capital gain of $310,000 a year. That is amazing. So adding on to the yearly dividends, which is $91,840, to the $310,800 per year capital gain, you're looking at close to $400,000 each single year, earning without doing anything, just buy and hold. I have to share this chart with you. This is Apple's line, the orange line. This is S&P 500, the blue line. All right, within 40 years period, the price return, or it's called a capital appreciation or capital gain, is about 33,000% compared to S&P 500, close to 900%. That's dramatic difference. If you're including the dividend earnings within these years, so the total return is capital gain plus dividend return is close to 40,545% compared to S&P 500 at 1,800%. You can see barely the blue line move, the dramatic upward movement from Apple. With that percentage, 40,545%, that translating to about 1,013.625% each every single year within the past 40 years. That is way more than Tesla's move. With Apple, you will never worry about the dividend cuts or dividend suspension or dividend elimination because of its constant positive cash flow. Starting August 2012, it started to pay regularly to the stock shareholders the dividends. As you can see, it started from 37.86 per share, gradually increased to 43 cents, 47 cents, 52 cents, 57 cents, 63 cents, 73 cents, 77 cents, and currently 82 cents. It looks like every 4 quarters, the company will increase the dividend payout rate. Now is the time for you to ask me this $1 million question. Should you or should you not to invest the money on August the 31st, right after its 4-to-1 stock split? Here's my take. If you remember that movie, Forrest Gump is a slightly mentally challenged person with great heart. He was born with polio, with that physical challenge, but he overcome all his challenges and become a greatest person in this world, sort of saying. All right. So he went to join the military and then invested a little money in Apple. Little you know that after he retired from military, his stock shares skyrocketed. He becomes a shrimp boat captain and become a millionaire afterwards. In the history of Apple stock, it made so many individual investors rich and become millionaires. This is the time in 2020, Apple again opened its door, opened his both arms to welcome millionaires, individual investors, or never being individual investors, wannabe investors, become rich. The chance of become rich, the chance of joining their magnificent force to become millionaire in the future. My take is the best place for you to store this investment should be in your retirement account. The best place should be Roth IRA, because all the capital gain and all the dividend growth in the Roth will be tax-free. If you invest $10,000 or $20,000 on August 31st after it's split at close to $100 per share price range, and let it grow, never touch the money, never sell, never trade. Let it grow, let it compound interest, and then reinvest all the dividends in the future months and future years. By the time you reach to your late retirement age, let's say 2040, 2050, 2060, or even 2070, doesn't matter your age. Your Roth IRA can be even inherited by your children or grandchildren. So that money, when you withdraw at that time, will be totally tax-free, regardless how much growth it will be in your account for Apple stocks. Apple is one of the greatest company ever created in this world. Apple stock is also one of the greatest stock ever created for us as investors. So I will not pass upon this great opportunity. I think you should not either. Join the force and give yourself a chance to become a millionaire in the future just by investing in the stock that you desired for a long time. Disclaimer, I'm not a financial advisor. I'm not a CPA. This video and all my videos on this channel should be considered only for entertainment purpose. You need to do your own research to determine whether or not you should invest in any stocks or mutual funds or ETFs.
Excuse me, pardon me, my lover, my doll. I like the way the fragrance brings out her perfume. As for my coffee, no need for sugar. The word is sweet enough when she is in the room.